All right, guys, we're gonna have Jeff Davis with Charles Schwab come up and start talking about Charles Schwab. He's going to give an introduction to what Charles Schwab is about, what they do, how they work it. I'm assuming that there's some people here who have never invested in the stock market ever. Can you raise your hand? If you've never invested in the stock market, Nadia, come on. All right, anybody else? Come on, anybody else? All right, we got a couple people. Perfect, awesome. We've got, does anybody trade on a daily basis? Like, okay. We got a couple, 2, 3, 4, 5, yeah, okay. And then people that have invested using a 401k or something like that. Okay, that's the bulk of the room. Awesome. Well, I met Jeff a little while back, and I have been really pleased with what Charles Schwab has done for me, and I'm excited to introduce them and hand this over. So, anyways, yep, perfect.
All right. Excellent. Well, it's kind of an interesting dynamic tonight because you talk about stories like the missions that we just heard, right? And the testaments and the testimonials, I should say, about people who've really gone through a lot in their lives. And I would say everybody aspires to get to being able to invest, right, and try to have a better living. And James, at the beginning of the discussion, said, I want you to be rich, right? Well, I think when people invest, that's kind of the end goal, but being rich is all relative to, that person, and that's really what I do is, first of all, Charles Schwab really started in 1974. We were a discount brokerage firm. We were talking about it earlier with some of the people in the group about Robinhood is kind of, in a way, sort of the new Charles Schwab, right? It's the new up-and-coming company that's had a lot of problems here lately. But and I've been at Schwab for 25 years. Actually, last Friday was my 25th anniversary, so I've seen a lot over these years. And at the end of the day, Charles Schwab's mission is to be the most useful and ethical financial services firm in the world. That's always been our mission, and that kind of fits in with what we've already heard earlier, is really try to change people's lives. Our most recent marketing is own your tomorrow. By investing now and saving now, you can control what your tomorrow looks like. That's really the mission to this group from what I heard from James, my first time meeting James face to face. We've talked on the phone a few times. And so there's a lot of parallels, and then also quite the opposite, right? Hardships to, I work with about $1.5 billion in my role. There's lots of wealthy people out there, and we want people to continue to grow their assets. That's our goal, right? So how do you do that? We're going to talk about some different ways. Brad, we already talked about some things you asked me earlier. And Austin, by the way, Austin is sort of the, I would call him, he's personally into day trading a little bit. He's into the new technology. He's a 20-something. He understands the Reddit. So I brought him because if you guys ask some of those types of questions, I'm going to pull him in. And by the way, I did name this guy. I worked with his dad in my first firm 30 years ago, and then they decided they were going to have a baby, and I said, "What about Austin?" And they named him Austin. And 25 years later, he works with me. So I wouldn't say I'm his mentor, but James talked about that. And one of the reasons I wanted to bring Austin here, he's super smart. And I thought it'd be a great chance to get to know some people and share some of his knowledge as well. So that's why he's here. But me, what do we do? I'll keep that brief. What does Schwab do, and what do I do? And then I really wanted to just make it a dialogue and answer questions. James gave me some planted questions, if you will, that I can use also. But my role as a financial consultant, 25 years, all in Spokane, all the same role, never done anything else. I didn't work into it. I didn't, cover the front desk like Austin's doing for us right now. I've learned a lot, but the main goal is really to get a good sense of where people are at in life. What have you saved? Have you saved anything? Have you saved a lot of money? Are you trying to generate income? Do you want to pay for your grandkids' schools? What is the goal? Everybody's different, but I'd say the main goal is save money so you can retire, generate income off the money you saved, and, hopefully, some of the businesses you have, real estate, that generates income as well, right? So one comment I wanted to make is those business owners in here and those of you that really aspire to do something well, James shares his business ideas. That's what he does well. I try to help people who make money their way make more money, right? Let's help you make your money make more. There's no one right way to do it. The Bitcoin, the digital currency, the active trading, that's a pretty small piece of what people really do when they invest. Investing, I've been using this phrase a lot because you've heard with the short selling issues we've seen lately and people betting against the market going up and down. I'm a believer of long-term investing. You should be rewarded for putting your money in companies that you think will do well, and you're rewarded over time. Now, if the company doesn't do well, you don't make money. But the day trading is just a small sliver of that. For me, as a financial planner, I want to assess where you're at, help you figure out what type of risk you're comfortable with, what's the time frame, and help you build out a portfolio that makes sense for you. And the nice thing about working at Schwab, James, one of the questions he said to me is, why Schwab? We were considered a discount brokerage firm in the 70s, 80s, and the early 90s. I started in 1994, 95 at Schwab, and we didn't really even provide any advice. But what were we? We were a low-cost place that people could invest their money, like Robinhood. And of course, last year, about a year and a half ago, our trades are now free. They're no cost as well. And so Schwab still has that discount mentality, but we've grown to where we can do anything that any investor wants. We can work with any type of investor. And that's the biggest message I think I want to deliver today. If you have never invested before and you want to get started, we can help you get started. If you've invested for many years at another firm and you think the fees are higher, we can always review that. If you want to manage your own money through Schwab, we'll give you guidance. Our website can help you research, rebalance portfolios, place trades. We don't care if you want to do it on your own. We'll help you be successful. If you want some of your money managed because you don't know what to do or you don't want to spend the time doing it, you don't have the desire to do it, we will help you manage some of your money. If you say, I don't ever want to make any decisions whatsoever, I just want to tell you what I'm trying to accomplish, you do it for me, we've got 50, 60 different solutions that we can do it for you. So for me, I really just to get to know the people I'm working with, what they're trying to accomplish, and how they want to try to accomplish it. And then I would say the biggest thing I do is I manage emotion more than I manage money in my role. And so when we talk about some of the day trading discussions, well, that's pretty emotional. And I think there'll be some questions. There's already been some questions tonight on that. But so that's really who Schwab can be for investors. We can play really whatever role people want us to play. And that's the role of me as a consultant. And I'm not a trader. I've got all kinds of partners that manage money for clients, and it's really my job to just figure out, what they'd be looking for, what would be the right fit. So that being said, I do have a few questions that James gave me that I can address, but I really thought it'd be more fun and more interactive and more useful just to really make this a questions answer session. And if there isn't any real questions out there, I've got other subjects I can talk about. But does that sound good? You want to just, anybody have something they just want to start with? Could be anyone. Brad?
Like I said, I know you guys because I have a Schwab account. Great outfit.
I planted him.
Yeah.
I didn't know he was going to be here.
But when I was in your office the other day, one thing I forgot to ask you, I keep seeing stuff about extended hours trading.
Mm-hmm.
And I'm not familiar with that. I don't know how to do that.
Okay.
And I read somewhere that Schwab offers it. So can you guys expand
Yep.
on that?
And I'll probably have Austin touch on that. And I want to also say this. In a group like this, when it comes to investing, there's so many directions we can take our conversation. I have cards here, so anybody's welcome to one of those. James knows how to get a hold of me, too. So if you're not comfortable asking a question and you want to call me or email me. And if it's a question that's a little too detailed, maybe it's not best in front of the group, we can always call you back on it. So what Brad had asked is, the equity markets, the stock markets are typically opened 6:30 in the morning to 1 in the afternoon Pacific time. But what about being able to trade after hours? And you hear a lot about that with Bitcoin and digital currencies. Did you want to touch on that just a little bit?
So I guess as far as extended hours trading goes, I mean, you have, like Jeff said, 6:30 to 1. Well, extended hours has both pre and post. So pre starts at 4 a.m. Got to get up a little early for that. Obviously ends at 6:30 when the market opens. You can trade pretty much on most brokerages. This used to be kind of a foreign thing, but with Schwab, it's pretty simple. I mean, you just literally have to select extended order or extended hours and then agree to some terms and conditions, and boom, you can trade. Post-hour trading is from 1 when we close to 5. The only catch with extended hours trading is it's not as liquid. So there is some risk to it. However, obviously, I don't know if you guys are very familiar with orders, but I'll go over some basic ones. So market order, if you place a market order for Apple, let's say it's trading at $100 a share. It's going to execute probably at $100 a share. But let's say that you want to get it at 95 or better. You put a limit order at 95. That way, if it's very volatile, meaning the stock is moving so much, you're guaranteed that price. And so that's the benefit of extended hours trading. Hope that covers some of the basics of that. So
that's a good question, but it's probably something that maybe a lot of people would never even use. But it's good to know that if you do want to trade throughout the day or throughout other international markets, it's becoming more and more readily accessible. So so if a couple of things James said, why Charles? Oh,
I was going to ask about GameStop. What's going on with this whole GameStop thing?
okay. That is the number one reason I brought Austin. Austin's 26. It's definitely a 20-something social, phenomenon. So I'm going to have him answer that as well. But I knew these would come up, and that's why I brought him.
So I'm sure you probably heard about diamond hands, yellow trades, all that kind of stuff. That's Reddit, and I think Wall Street Bets has been around for a little bit, but it was just a Reddit forum, basically a Facebook forum. So GameStop, man, I get this question.
Talk about it in general terms, like how do these social groups affect any stock, in GameStop would be the one that's most.
So around May or June of last year, I don't know if you watched the testimonial, but Roaring Kitty, or one of the main guys that was on the forum, posted about GameStop. And basically, it's kind of like in The Big Short, the intro said, all these people like Michael Burry, all they did was they looked. Well, so did GameStop traders, or at least this guy, because GameStop is heavily shorted because of the pandemic. Obviously, retailers did terrible during this era, and so the stock was heavily, heavily shorted. So much so that there was more shares that were shorted, meaning there was more shares bet against than actual shares available to trade. So basically what happened is Wall Street Bets got together and said, hey, I think you should buy this stock, this is why. And when you have 10 million, they call each other degenerates, that come together and buy a stock, eventually you have so many people, and social media, I don't know how we're going to regulate that, but it goes to show how powerful it can be. And basically, a lot of people just started buying the stock. And what I find really ironic about the whole situation is, all these hedge funds come out and they start crying and stuff. They've lost billions of dollars and, they have billions in excess. But, all the hedge funds tell all poor people to do is invest. Well, that's what we did. And as soon as we did it, now we're in trouble for it. So I think GameStop is more of a symbol almost. It is crazy what it has done, but it's also phenomenal. I think the movie will be really good about it. I'm sure. So if you've seen The Big Short, I think they do a really good job. I mean, I could talk about this for hours, and it would be kind of complicated. But The Big Short, if you've ever seen it, does a really good job of dumbing down kind of all the terms and stuff. And I hope the movie that comes out does it as well, because like I said, I could bore you, but I could also fascinate you. But the era of GameStop, I think, is kind of a new era of trading. I think the coronavirus did start that, but I think GameStop really instilled that, and I don't think that's going to change. I think you're going to start seeing this until the government comes in. I mean, we had a testimony, 2 weeks ago about it, and who knows if things are going to change. I think social media, like I said, is it going to be regulated? I don't know. It probably, yeah.
So I'm the old curmudgeon in the office now. I've been licensed for 30 years, and what we've talked about in the first two questions might not even be relative to any investment strategy. A lot of investors buy mutual funds, exchange-traded funds, which are, more benchmarks, much more broad. What happened with the GameStop and highly volatile companies really doesn't affect that type of investor at a very high level. And that would be what I would preach to investors: have a portfolio that's built out, that's diversified, that you don't have to worry about daily, weekly, quarterly, maybe even annually. Just be a saver. And the more time that you invest, the higher probability of success you will have. I have never seen anyone that's invested in stocks for a long period of time not be rewarded for the time that they've been invested, 10-year periods, 20-year periods. I mean, everybody that I've met in my time at Schwab, 25 years, everybody that has money, and I think this is good for this group, like minds, right? You either had a highly compensated career and you were able to just amass money every year, and even if you invested in cash, or you were a stock investor. Now, bonds, cash, those have their place, but you were invested in stock. And if you just owned the S&P 500 or QQQ, which is the NASDAQ index, which has tons of technology in it, Apple, Amazon, Google, Facebook, that type of stuff, you will be rewarded over time. And some of what we hear with digital currencies and Robinhood and Reddit and these types of companies, GameStop, it's not as relevant to that type of investing. And that's not going to go away. And that is me, again, being that old curmudgeon. Be diversified, hold the course, and you will be rewarded for it over time. And you don't have to understand everything when you take that approach. You just invest into these indexes, have a manager do it for you, and you will be rewarded. It's okay if you want to learn, not a problem. I'm not discouraging that, but you don't have to learn how to invest and how to research companies to be successful is the message I want to. Was it Dave over there?
Yeah. Jeff, I might be the dumb kid in the room, okay? But 11 years ago, I cashed out my 401k and started my company, and I've been doing that ever since.
Okay.
I've never re-entered the market. When I had a 401k, I was working for somebody else as an international chemical trading purchasing manager, and they were matching what I was putting in, and it was managed by somebody else. And ever since then, it was kind of take care of myself, buy my house. I just ordered a brand new Challenger wide body. Me and my wife have matching built Jeeps. We have all the toys.
Yeah.
And I'm sitting there going, okay, I should probably start looking at my retirement because, the business that I'm running, I can do in my 70s or 80s, but I don't know how to re-enter.
Yeah. So that's a question that comes up a lot. First of all, is the business, it sounds like it's successful, right? So if you're lucky enough to work for a company that has a retirement plan and they match contributions, first of all, I would say make that your number one investment. Start there, right? If you put in $5,000 and they give you $5,000, well, you just made 100%, even if you leave it in cash, right? Now, you cashed your retirement plan out to start a business. You probably paid tax and probably a 10% penalty, but you are in control of your business. Now, if that business has growth potential, income potential, you're in full control of it, right? The stock market, you're not. I mean, there's a lot of things going on. You don't control the companies you're buying. The social media game is a whole new world. Technology creates a lot of trading volume. I mean, I'm still a believer in it, but you aren't in full control like you might be your own business. So there's nothing wrong with that. But if the business has, say, a cap, or it's only going to make money if you're running it, now, if you can sell it, hey, it's like buying a stock, right? Now, what are you going to do with those proceeds? You come to a place like Schwab, I need income now. How do I get it? And the biggest dilemma, by the way, I think it's important to talk about is interest rates are so low right now that cash and fixed income bonds generate very little. I mean, I will be happy if my bond managers get investors 2% right now. It's not going to always be that way. But how do you get income if you sold a business or have cash, whatever however you amass the cash and you need income from it, from fixed income and dividend paying stocks. And the value there is dividend paying stocks might get you 3%, not a lot. But if you buy a stock and it's paying you 3%, 5 years later, 10 years later, 20 years later, that stock, we would hope it grows as well. So that's a conversation I have a lot with people now. How do I generate income? But for you, okay, I want to get back. When you said you want to get back and you want to get back in the market, the stock market, you got to start, whatever your cash flow looks like. But what you're doing when you do that is you're diversifying out of your business. You put all your money in your business, and if you're confident it'll continue, I don't see anything wrong with continuing to do so. But putting it into the stock market, the bond market, that's just diversifying, which I think everybody should do. There's real estate. I know there's a lot of real estate in this room, real estate businesses, and that's awesome. I mean, real estate is its own little, huge industry. But to diversify from real estate, the most obvious choice, in my opinion, is stocks and bonds, and it's more liquid. Real estate has its illiquidity issues too, but so that's an example just of diversifying, right? If you have a business, great. If you have real estate, great. Stocks, bonds, cash, commodities, you can invest into oil, gold, silver, stuff like that. You can buy real estate investment trusts, which are like ETFs or mutual funds, that the underlying investment is real estate. So if you don't have your own real estate, but you understand the value of owning real estate, you can do it through a firm like Charles Schwab through investments. So I'm just going to go ahead and jump right back into the Bitcoin and digital currencies. It's limited in what you can do through a company like Schwab because it's not a regulated industry, but there's 5, 6, 7 different funds that you can buy that own digital currency as the underlying asset. So, as those currencies go up and down, this fund goes up and down, and you don't have to go research which ones to buy. You can do it, but it's pretty limited right now until that industry becomes more regulated. Firms like Schwab aren't going to touch it until it's government regulated because there's too much legal lawsuits waiting to happen. So I think I saw.
If somebody wanted to get started in day trading, or just even buying stocks on the regular, where would you recommend they start educating themselves or doing research?
Well, I'm a little biased. First of all, Schwab.com has a ton of information to be able to research financial planning, tax information, estate planning. But there's lots of stuff, how to research a stock, what are the ETFs that we recommend, stuff like that. When it comes to day trading, and by the way, I don't know if the word day trading and the phrase day trading is used a lot. And the true definition of day trading is you start the day with cash and you end the day with cash. But most people think of day trading is, I bought 10 stocks, I sold 5 of them next week, I buy 5 more. We call that active trading, and that's fine. But actually, James, one of your questions that you sent to me in an email was, I think it was more of a historical question. Who does better, day traders or long-term investors? And I know statistics change, and as I understand it, 96% of statistics are created on the spot. Okay, I just made that up, right? 94% of day traders, active traders, don't make money. So I'm sure it's not exactly that, but it's a very high number. So being a long-term investor over time, it's maybe boring, and you don't see the results quite as quick. But at the end of the day, I would say more success comes from long-term investors, a much higher probability of success. But that doesn't mean that there's not. I mean, I looked at a client's portfolio. He had like $9.8 million last year, and he's got $21 million. And I'm like, wow, this guy's a local small business owner, or was. And I'm like, I couldn't offer him a service that would have done 100%. So I'm not saying you can't make money day trading, but Schwab's website, again, I'm a little biased. Chuck's books aren't really about day trading; they're more about long term. I don't know if you know of any day trading books.
YouTube, to be honest. I mean, And I don't say that like a Wikipedia page. You know, I've sifted through for years. I mean, I've traded since I was 16. So I think YouTube has grown to be a powerful source for younger people. And obviously you have to take it with a grain of salt. I mean, you see all those big thumbnails of, you know, make 30x on your money and stuff like that. Yeah, you got to be able to sift through that. But part of that is learning. I mean, that's you know, if you want to learn about how technical analysis works, I mean, there's some great channels out there that do a really good job, that have millions of subscribers and have been trading on Wall Street or have done that. And I think YouTube's great because it's free. And, you know, obviously, you know, you get his perspective and my perspective on it. Obviously, Schwab has great tools for active traders as well. It's not like we don't. But as far as like getting into it and learning the basics, YouTube is great. It really is great. And there's subscription services that I've followed before that have taught me just basic things on the market that I had no clue about. And, you know, that's much cheaper than possibly, you know, hiring an RA or something like that. So Schwab doesn't necessarily do too much trading, but we do. We definitely do. We do have an active trader. So
yeah. We have multiple trading platforms through Schwab, schwab.com, streetsmart.com, and streetsmartedge.com, and then Streetsmart Edge, which is just a software you can download onto your computer, which just has lots of charting capabilities, additional research, multiple trading capabilities for people that want to take it to that extent. I said earlier, we can meet the need of any type of investor. That's a perfect example. Somebody that really just their job is trading. And again, I won't say day trading. Their job is trading, or they're retired, and frankly, they're bored in retirement, so they trade. I tell them to get a life and do something different, but hey, that's just what drives some people. And so we have different platforms that people can trade and be successful and have the information that they're looking for to people that don't even want to get right onto schwab.com at all. And so the cool thing about my role is I manage the relationship that people have with Schwab, and I've got many professionals that help me. I mean, I wouldn't expect everybody in this room, call me tomorrow. I mean, I'll be in meetings most of the day, but I've got Austin partners with me. We've got an office of 8. You know, 3 of those people partner with me. Our 800 numbers, 24 hours a day. Our website. I've active trading specialists that'll help you. So if you're a Schwab client and you say, "Hey, I want to trade, but I don't really know where to start," or I understand their stock options. I kind of get it, but I don't. I got a guy for that, a gal for that. They can call you and help you with that. And so I pull these specialists into the relationship as needed. So that's the cool thing about my job is I can hand Austin this mic, or I can hand your call off to somebody else within my company for you to be successful. So yeah, but yeah, I never, YouTube's good for so many things. So yeah, one thing I would say when it comes to advice on the internet, or like, the old school infomercials, right? Hey, we can help you with this. Here's information. Oh, but you have to pay us for it. And that's the cool thing about YouTube. And at Schwab, we want to educate people as much as possible so that you can be successful. I mean, at the end of the day. So, like I said, I told you what our mission statement is up front. So, other specific questions?
Tell me more about Bitcoin. I just recently learned about it.
Okay. All right. Yeah.
So, Bitcoin, raise of hands of who knows what Bitcoin is. Now, keep your hand up if you understand Bitcoin. Kind of. So, I would say just on a basic premises, it's just a decentralized way of cutting out the middleman of digital transactions. I mean, you have that with Visa or anything like that. You're just cutting out the middleman. And what's so cool is Bitcoin is just, everyone says Bitcoin, Bitcoin, Bitcoin. But there's so many projects that are doing it better. Has anyone heard of Ethereum? Has anyone heard of a Cardano? So you keep going into these networks. It's not just Bitcoin. There's hundreds of coins and stuff like that. And I can't speak too much on it because the people that are doing these projects and creating this technology are eons smarter than I am. And that's why I really like it. I think it's fascinating, and I think it's the future. The way I look at it is I see it as the internet in 2000. Now that's a big, bold statement, but as the more and more I look into it, I just find it absolutely fascinating. And, you know, it's not necessarily that new either. I mean, Bitcoin was established in 2009, right after the financial crisis. So, I mean, it's definitely still growing, and I think it is of the future. I mean, Tesla just bought $1.5 billion of it. So I think people will learn more. I think Schwab, in my opinion, will have to assume and be able to trade Bitcoin because places like Robinhood already do. And, you know, we in America are quite a bit behind with cryptocurrencies. Most of it is in Asia. Quite a bit of it also is in Europe. So we're starting to kind of pick up the pace with that. I can't go too much into it, but, you know, it's just a digital transaction, digital world that hopefully is much more secure. I think a lot of people talk about security with Bitcoin and stuff like that, especially getting into it because you can't, you know, it's a digital currency. But, you know.
It's hard to go too deep.
Yeah.
Now I'm going to put on my old school curmudgeon hat again. Okay, so it's an unregulated industry, which there's no government regulations to these digital currencies. So a company like Schwab really doesn't want to touch it at a very high level at all for now. To Austin's point, at some point we will. At some point there'll be some regulation there. I don't spend a lot of time with it, but we could have Jeff and Austin's coin. We could call it that. And Austin can post something on the internet and we have followers, and all of a sudden it boosts the valuation of our digital currency up. So it's a little scary. People are making money when others are losing money, and they're trying to manipulate it a little bit. It doesn't mean there's not some substance to it. Brad and I were talking earlier tonight, and I said, for me, it's another way to diversify your investments away from the U.S. dollar, and let's hope the U.S. dollar doesn't go away. Because, by the way, everything we're talking about right now, if the U.S. dollar goes away, it doesn't matter if your Schwab statement says $1,000 or $100 million. But a digital currency is a way to hedge against our traditional currencies, the U.S. and in other countries around the world. Another way to diversify, and this is what Brad and I were talking about, is commodities, right? There's always been the gold and the silver and the oil. I get a little silly about it, but I say, well, if I'm not going to invest in stocks that are backed by the U.S. dollar, I'm not going to buy gold. I'd rather have other commodities, but my commodities, and again, I get a little silly, would be land, ammunition, water, and guns. That's just how I am, because if we don't have any U.S. dollar, our whole world's going to change. But that's not what I think will happen. I'm just saying if it did, that's the type of investment I'd rather have. But digital currency is just another way to, I think, just kind of spread your wings a little bit. But a lot of people are having fun with it and day trading and making money. So we could go into it deeper, but not with the group. But maybe that helps a little or not so much. Any government could reset their currency, or, I mean, countries have done that. They just reset their currency. I think Greece has done it probably 24 times over the last 200 years. But the U.S. could do it, right? But I think the repercussion to that could be a lot of violence and a lot of problems. We already saw it last year just from other subjects. But yeah, the U.S. could do that. Or they could say, we still have the U.S. dollar, but now we're going to recognize the U.S. dollar through this digital currency. But that doesn't necessarily work hand in hand. And like Austin said, there's really smart people running that. But yeah, they could. They absolutely could. And honestly, if a digital currency has backing that's either followed, trusted. Well, you talk about Tesla, right? Let's say, people trust Tesla's decisions. That might then hold more value to that currency. So a U.S. government could do the same. So was that you, Dave, or Jeff?
So I'm going to put you on the spot here. So we're talking about ammunition and gold and all this fun stuff, but with the re-interest in the Green New Deal,
No. Mm-mm. I mean, to own oil is okay. I mean, it's diversifying, but I mean, people. That's a good topic, right? The election results. People call, hey, with the election results, what are you doing differently? Typically, nothing long term. Administrations come and go. Economics and economic cycles are more powerful than an administration always have been. But administrations are getting their hands in more pots. Obama's gotten to the private banking sector for a reason, and the oil industry. And
So that's a good piece of advice there. Economic investments have outlasted administration.
it is a good.
Knee-jerk reaction.
Yeah, you nailed it. You did what I tell people. I'm not going to do anything until the election's over. Why? Well, I just want to wait and see what happens. Okay, I understand it's emotional. It's more this last two elections have been the most emotional in my lifetime, and I don't think it's going to change. I think that's the trend we'll see. But you nailed it, and I made the comment earlier. Long-term investing is what you're rewarded for. Now, to touch on the oil, the Biden administration comes in, they are more green-focused. Oil is pretty low per barrel right now, and it has been for quite a few years, so it has not been a very good investment, although oil companies do pay a good dividend. So that would be don't get out of that sector, but maybe reduce it and look at more green energy sources, natural gas, et cetera. Batteries are now out there too, right? And so you want to have a diversified portfolio, and that might be, let's add 1 or 2 or 3 investments that touch on some of these industries. And if Trump would have won, frankly, oil companies would have done better.
So I'm going to ask a correlation question, right? So you're mining nickel and all sorts of stuff that you make batteries out of up in Canada. You ship that stuff overseas to China. You refine it, you make a battery, you ship it back, right? We're burning oil the whole time. And then you see Tesla buy into Bitcoin. Tie that picture together for me.
Well, how much money does he own, or does he have? It was, so he lost a lot of money this last week because of that Bitcoin purchase. But that is just somebody who's massively wealthy, putting less than probably 1% of his entire net worth into something that he think will do well. But you also nailed on a more important topic about oil is being burned. For now, it's not going away. And it's not going away in any of our lifetime. It might not be your best performing sector or industry. So why would somebody own Chevron or Exxon, for example? Those companies aren't going away because they pay like a 7% dividend. So if the stock just stays flat, that'd be okay. And they pay a quarterly dividend that equates to about 7%. Back to my comment earlier, how do you generate income? There's no one right way to generate income, but the best 2 ways and the simplest ways to do it are interest from bonds and dividends from stocks. So if you had $1 million and you could get 5% from dividends and interest, that's $50,000 a year. That might be all a person needs when it comes to retirement. That's the type of planning that I do, and then I pull in people that help accomplish that. So you kind of help me tie in a few concepts, but I mean, at the end of the day, there's a lot we don't know. And how do you get around what we don't know? Well, you diversify, right? Don't put all your eggs in one basket. Too many people do that. The tech bubble in 99, 2000, 2001, 2002, those people that got beaten up by that, everything they owned was tech companies, and they got killed. But people that were diversified, and that's the majority of the people I worked with, it hurt for a couple of years, but they rebounded. But the people that had tech companies, well, some of those tech companies went away, and a lot of those people just cashed out because they were not comfortable with the decision they made. But when you behavioral finance, by the way, there's lots of studies on it, and when you have someone that you can talk to, an Austin, me, somebody at Schwab, you make better decisions and you're more successful. So we definitely believe in our model. James, one of the questions you asked, why Schwab? Low cost. We do everything anybody could need. We also have 380 branches. Vanguard, Fidelity, Vanguard's got like 4, Fidelity's got like 50, for example. So having bricks and mortar as well allows us to help people manage that emotion. Like they want to know they can talk to someone. Look, WebEx calls nowadays. By the way, I'm super excited to be the only thing I've done in the last 13 months is a wedding in Idaho and tonight. So otherwise it's all digital, but Idaho is way better right now. So anyway, I don't know if that helped a little. James. Oh, yeah. You had asked in this email, does Schwab offer margin? Yes. What is margin? It for taxable accounts, non-IRA accounts, like trusts, individual joint accounts, community property, you can add a margin feature, and that really is just allowing you to borrow against your account. It's not cheap. The base rate for that is 6.5% interest. So you're paying 8. If you have a higher margin balance, the more you borrow, the lower the interest. But it's minimum 6.5. So yes, we do it. James, you asked, could we negotiate it? Yeah. If somebody says, I've got $10 million on margin over at E-Trade, we'll negotiate. The cool thing about margin trading is when the market's going up, you can buy essentially twice as much. It's more than that, but let's just say twice. If you have $1 million, you could buy $2 million of stocks. And if those stocks went to 4, you doubled your money. Your 1 would go to 2, but your 2 went to 4. And then you can pay that loan back. The bad thing is when the market goes down. When you reach 35% equity, so you're now more borrowed than not, you get a margin call. Schwab's 35%. Some can go as low as 25, but most are 35. And if you get a margin call, Schwab does not have to pick up the phone and say, hey, James, you're at 34%. We're selling some of your Apple to cover the debt. We don't even have to call you. We will try. How many people were on hold at the high point last week, for example? It's been a lot of the Robinhood traders have come to Schwab. Why? We didn't have system problems like they did. But now we have a lot of volume. So we have people on hold the last 2 months, longest period of time I've ever been at Schwab where we have people on hold. We don't have anybody who's going to pick up the phone and call you because you have a margin call. We're just busy answering the calls. So that's the negative. So yes, we offer it. Yes, we negotiate the rates, but it's expensive. We actually have what's called the pledged asset line, and the interest for that would be more like 3.5%. And it's a loan. It's a bank loan. I'm a dual employee of Schwab Brokerage Firm and Schwab Bank, so we do lending as well. So a pledged asset line takes a little longer to set up, maybe 2 weeks. There's no fee to do it, but the interest rate's a lot better than a margin. And so for taxable accounts, that's a better way to do it. Or a home equity line of credit, that's a lower interest rate too. Borrow against your house. So that help with the margin? Yeah. Okay.
Are you able to do margin on your long-term hold clients?
Oh, absolutely. Yeah. Yeah. And you asked a question too, like what could a client expect in the way to return, or how have clients that I've worked with done? Really impossible to answer because the whole gamut is there. The person that's in cash. I have one client who's 88. She's got $5 million in Exxon. It's been terrible the last 3 years, but she will never sell it. To clients that we diversify using ETFs or mutual funds or, dividend stock portfolios, municipal bonds, tax-free bonds, corporate bonds, a mixture of all. At the end of the day, I believe in professional management. I also believe in indexing. You've already heard me say that. What does that even mean? If you spend the time in the market and you're committed to being a long-term investor, whether you use indexes, whether you use ETFs, mutual funds, individual stocks, bonds, your return is really based on what percentage is in stock, what's in cash, what's in bonds, REITs, real estate investments. The asset allocation really dictates your return at the end of the day. So if somebody was all indexes and somebody was all individual stocks and bonds and the ratio is the same, call it 50-50 stocks to bonds, in 20 years, I would say the annualized return is going to be very similar. So I could never tell you what the performance has been on average, but I can also, we've got different specific strategies, and I can tell you exactly how they've done per year. So if a client was in that, then I can tell you exactly how they've done. But I try to get people to focus on who they are and not just where they've come from and what they have and where they're trying to get, but also how are they emotionally. I mean, there's some people that when the market's down just 1,000 points, which is not even, 2%, 3% maybe, I know this client's going to send me an email and he's going to want to get out of the market. And then we're going to talk him down. If he wants to get out, he get out. But I think I'm not doing my job if I don't try to, what are you trying to accomplish? You just sold your business for $4 million. You only need 4%. You went to a party. He's a big coog. You were down in Pullman and the guy you were drinking with said he was up 20% last year and you were up 7%. Why? Because you're invested different. And so that's really what I do with investors is put together the plan, execute the plan, continue to execute the plan until things in your world change to dictate changes, but not because there's a different president or because, oil's up or down or whatever's going on with Robinhood and all the noise out there should not dictate what you do with your investment strategy. It's not to say that you can't make money on it though, right? I mean, that's what Austin said earlier. Regulation of social media, it's a whole new bear out there. I don't know what this industry is going to do, but I know a company like Robinhood's not looking very good right now. They could be gone. And so anyway, and now I digress into different sections, but this is the type of conversations that we have with people. So.
You talk about how to make money or do well in a bear market?
Can I talk about that? Okay, so that's a good question. So shorting or betting against the market through stock options is a way to do that, right? You're hoping the market goes down. And by the way, I've been pretty vocal the last 6 months. My 30 years in this business, I don't think it should be allowed. You shouldn't be able to bet against a company failing to generate income for you. It just shouldn't be part of the industry. I don't get why it is, but it is legal, and that would be one way, and that would be essentially what happened with Robinhood. They were shorting. Everybody was shorting GameStop, right? And so they wanted the stock to go down. Well, the hedge companies were shorting it. They wanted it to go down. They make money if it goes down. So that's one way. Options, which is, options I think is fair. You still can bet against a company or for it, but only for a certain period of time. And you're paying for that. You're saying, I have an option to buy this stock at 10. I want it to go to 20. If it does, I can buy it at 10 and then sell it at 20. Or I have the option to sell it at 10, and if it goes to 5, I can buy it back at 5. And so you're betting for the market to go up and down, but you're paying a fee for it, and you only get a certain period of time. So to me, that's a little bit more legitimate than shorting the market. But it depends on what side of the market you're on. You can still hope it goes down. So those would be your two obvious ways. And then when the market goes down, and you're talking stock market, I'm sure. Yeah, exactly. Okay, so fixed income struggled during that time, but how would you make money then? Commodities, typically. And I would typically don't recommend more than 5 to 10% of a portfolio in commodities, but if the stock market's going down, gold is usually going up, for example, or oil is usually going up. So, but the average bear market is about 18 months. My comment there would be own stocks long and ride through it. So
another vehicle you could use is an inverse ETF, which is common. So you have your basic ETF like SPY. You also can have an inverse ETF like UVXY, which bets against the market. They trade similar, but they're inverse of each other. To his point about shorting, I know he hates it, but to a certain extent, I agree with shorting if a company is garbage, like biotech stocks, very speculative. So If a company is cooking the books, like I've had experience with day trading and lost a lot of money, shorting is good to a certain extent. So, but like you said, average bear market is 18 months. It's not a long-term kind of thing, but at least having the vehicles to do that, like you said, puts or shorting. But I would say kind of a more conservative option beyond those would be those inverse ETFs. And they're fairly newish, I would say, more newish, but they're definitely more prevalent, especially, in 2020. I mean, definitely we went down a lot, but we came back a lot too. So.
And it does hold companies accountable. You're right. I don't know if anybody remembers Enron in 93, 95, 96, cooking the books, as you put it. Shorting the market, betting against a company does have some accountability that a company's held for. So I still don't like it. How we doing on time, James? Probably time to wrap up. Okay. I'll just give you a stack of cards, James. Anybody wants one, grab it. Email is always a good way to get a hold of me if you have any questions. I appreciate your time. Thank you.
All right, guys. Well, that was it for this month's Mastermind. I appreciate you making it out. And I just want to leave you with a couple ideas. I don't know where each of you are at. Some of you are making, hundreds of dollars. Some of you are making thousands of dollars. Some of you are making, tens of thousands. Some of you hundreds of thousands, and some of you millions of dollars. There's people in every range in this room. And what I'd like to encourage you to do is to really look at what you're doing and try to figure out ways that you can try to invest on a small scale. One of the things I love about investing in the stock market is that you have liquidity, so you have the ability to put money in there while you wait for something to happen. So you can, if you're saving up for a house and you're wanting to buy a house, you can put it in some conservative stocks, some conservative, different positions. Jeff can definitely help you out. And you can work towards saving up for the next house that you're purchasing, or for your first house, or for the next car, or for the first car, or whatever it is, for the next business, for the next apartment complex, whatever it is that you are saving up for. Each of us have to go through that process. There's a period of time where we have money sitting, and I would encourage you not to let your money sit. When your money sits, it's depreciating. I know that's kind of a weird concept, but it's losing value. It is depreciating as it sits. So I would encourage you to take that money and invest it. You can invest it a lot of different ways. Stock market's one option. Cryptocurrency is another option. There's many options that you can use. I like the stock market. I like cryptocurrency because it's liquid. You can liquidate it. You can have the money back in your account within a couple of days. So you can go then make your car purchase. You can make your house purchase. You can make your business purchase. Whatever it is that you're trying to accomplish within a few days after selling that off. Now, there's volatility, so you may have ups and downs, and your account may be up or maybe down, and you may be going through a bear market or a bull market or whatever that is. But in general, you're going to do much better by having your money invested than you're going to have money sitting under your mattress, or money sitting in your wallet, or money sitting in. So I have lived kind of over a period of time, really living very lean. I don't sit on a lot of cash. I make sure that I'm putting money into investments and keeping it active and busy all the time. And I can say for with 100% clarity, it has made a difference, and I think it will for you as well.